Welcome to the National Real Estate Cafe with Don Getling and Gino Fronti as we compete to make sure you get all the information every single day.
Yeah, we didn't know who was going to open the show, evidently, but we're glad you joined us today because we don't want you underestimating anything, right?
Yeah, there's so many things. I mean, that's kind of what we're here for, Don. Every single day at the National Real Estate Cafe, and you can get this every day by texting NREC to the number 58885, is to debunk the myths and educate you to make sure you have all the tools to make great decisions about your home.
All right, so a lot of you are underestimating how much equity you will actually have because we've had a very good appreciating market in most markets, not all markets, but in most markets, quite a bit for the last 4 to 5 years. So what does that mean? More equity position than you think. But if you're underestimating the amount of equity you have in your home, what else might you be underestimating?
Well, what's interesting is that maybe you think that you can't qualify for a better loan because that's what you were told a few years ago because you didn't have a big down payment. So maybe you're underestimating what you qualify for.
Right. And you might be underestimating how big of a down payment you have, the ability to put a down payment and eliminate mortgage insurance, and the ability to sell your home because we're actually short on supply right now. So those are the things we don't want you underestimating because here's another slide. We've shared this before in previous, but we're going to continue to educate you because a lot of you, based on the Fannie Mae did a report, 37% of you think you have 20% equity position.
Yeah, but actually 69% of you do. So this is, for me, what I'm looking at. The government should tremble when they look at this equity position because that's a lot of tax-free money. And I know I keep banging the table on tax-free money, but just to give you an example, here in California, it wouldn't be uncommon. We have a client that just did it, made $150,000 over the last maybe 4 years,
right.
3.5 to 4 years. And so $150,000. If you were to make that at work, you'd probably have to give $50,000 of that back to the government. Well, because the government wants to continue to stimulate home ownership, you can take all that money tax-free, talk to your CPA, and roll it into a new home. So as Don likes to say, how did my neighbor who makes the same as I do get into that big, nice house?
Yeah, that's how they did it. Okay, so maybe you want to find out, what are my options? Because on this, here's another money tip, again, from Money Watch. Okay, if you're in a position to sell and have your housing needs covered, your timing is excellent. Prices may not have peaked, but you're in a healthy bargaining position, especially if you have a coveted starter home that is priced within the reach of the first-time home buyers. Demand is there if you have the right supply at the right price.
Don just hit the nail on the head right there. If you had a starter home, you bought that house because it's what you could get started with. Guess what? We have first-time home buyers again that want to do the same thing you did. So when you move up, you create opportunities for others.
And then if you want to see what your options are, talk to a mortgage professional. You use a great program like Mortgage Coach. Our buddy Dave Savage and the crew created this program so you can see exactly what your options are. You'll be surprised. You might be able to move up to that dream home and not change your payment much.
Yeah.
You heard it right here on the National Real Estate Cafe. I thought you were going to close.
I guess not.
All right, just make sure you text NREC to 58885 and you receive these updates on a regular basis. Thanks for joining us.